reports. Struggling retail chain store Nakumatt is in talks with market rival Tuskys for a possible rescue. Talks on the deal are said to be at the final stages and could offer a lease of life to the stores. Dennis Otieno reports.
Over the last 8 months, leading supermarket in the country Nakumatt has made several attempts to come out of its financial quagmire. The retailer, hit hard by cash flow issues, struggled to keep its financial obligations to suppliers with little success. With its debt said to be over 30 billion shillings, Nakumatt has struggled to keep its branches open.
I think it's a financial challenge that a number of events have come together, a bit like a perfect storm. They've come together and they've accumulated in the position that we currently have and that we're currently working through.
However, the latest talks with its rival Tuskys could see it remain afloat. While details of the merger remain undisclosed, insiders have intimated to Citizen TV that 2 options were on the table. These include a merger of the 2 businesses or a shoulder-to-lean-on kind of arrangement, where Nakumatt will be granted supplies it badly needs on Tuskys' goodwill. In June this year, Nakumatt had approached the government through the Ministry of Trade to try and negotiate a deal with its creditors. This followed a collapse in talks to woo a deep-pocketed investor to pump in 7.5 billion shillings to rescue it out of its near collapse.
I'd be handling Nakumatt yesterday, and the other day it was Uchumi. It creates a moral hazard. We need a proper regulatory framework in place, and this is what we are going into.
Apart from the financial woes bedeviling the retail store, analysts reckon that its market share has also been eaten by new entrants in the space, among them South African Game Store, French-anchored Carrefour, as well as growth of other smaller estate-based supermarkets. If successful, the merger between Nakumatt and Tuskys would portend a concern for the Competition Authority of Kenya. The new outfit would boast of in excess of 130 branches across Kenya and neighboring countries and a dominant market share. The financial crisis has seen the firm struggle to pay salaries in recent months, leading to strikes, closure of 2 of its branches in Kenya, and Uganda Revenue Authority auctioning its assets in Kampala. The retailer is also facing insolvency suits in Kenyan courts as creditors seek to recover their debts. Dennis Otieno, Citizen TV.
Clinical officers marched through the streets of Nairobi today.